Welcome back. We're bracing for a strong opening. It's a good time to get in, a derivative and technical analyst. Chandan Taparia joins in. Hi, Chandan. How are you focusing on the market today? And fill us in with your picks.
Good morning, Nigel. Thanks for having me. We have seen good run-up in the market, and finally Nifty has managed to surpass an immediate strong barrier of 17,777. And we have noticed that multiple occasions market was finding hurdle near to the same zone. So now a decisive hold above the same, giving the cheerful sentiment to the Indian markets. So we believe that hold of 17,777 could see the firecracker towards the Diwali by heading towards 18,500 marks. But as of now, we are looking for an upside move towards 18,200 level. So continuously suggesting to be with long side support of 17,667 for upside move towards 18,200 level. The good part is that we have seen decline in India VIX that is near to 18 zone, and put call ratio jump beyond 1.3. So rising put call ratio with falling volatility with market higher base clearly indicates that momentum could continue. Now talking about the bank Nifty index, here we are witnessing more strength. And if I look at the data of the banking index, the lifetime high is 41,829 made in the October 2021. And as of now, the highest weekly close is 40,323. So today, if Bank Nifty closes higher by 120 points, then it is going to be the highest ever weekly closing for the Bank Nifty in Indian market. So that will add more momentum, and I believe that banking index are going to hit the new lifetime early than the Nifty index. So more positive on the Bank Nifty, and we believe that with support of 39,750, Bank Nifty has potential to head towards 41,000 and then lifetime high of 41,829. Now looking at the stock wise, as more positive on the BFSI and the banking name. So first it is buy on ICICI Bank. So this stock has given a consolidation breakout, already trading at lifetime high. Technically speaking, it has given a breakout from an ascending triangle which has bullish implication. Long rollovers with long built up by 4 to 5% on the last trading session also at the immediate momentum. So recommending to buy with a stop loss of 880, and ICICI Bank has all potential to head towards 945 level. Second trading ideas, that is buy on Pidilite. We have seen that FMCG stocks are having low beta but doing more stability and momentum, and crude prices also supporting to the sentiment of the counter. Overall trend is positive. Every small decline is being bought. Yesterday we have seen good run up after the decline of last 3 days. So that is also giving the better risk reward ratio in terms of lower time frame. So recommending to buy on Pidilite with a stop loss of 28.25, and this FMCG measure likely to head towards 3,000 marks. Last trading ideas, that is buy on Ultratech Cement. We have positive stance in most of the cement counter. In fact, from last 3 to 4 trading days, we are continuously talking and recommending about cement, including ACC, Ambuja Cement, Ultratech or India Cement. But now we are recommending to buy on Ultratech Cement as a fresh trade. This stock has given a fresh consolidation breakout. Also, a pattern breakout of cup and handle formation on the daily chart, which adds momentum led by short covering. So recommending to buy on Ultratech Cement for an upside move to us 7275. One can use the stop loss of 6775 to ride the momentum of Ultratech Cement in the market.
Okay, Chandan, thanks a lot for joining in. Have a great weekend. That's the word coming in from Motilal Oswal. But today is World Electric Vehicle Day. My colleague Parikshit caught up with Shailesh Chandra, the MD of Tata Motors Passenger Business Unit, and began by asking him what kind of growth they expect from electric vehicles in FY23. Have a look.
The journey in the last 3-4 years as far as electric vehicle car industry is concerned, I remember that in FY19 this industry was at about 2,000 annual sales level, and last financial year in FY22 it ended at roughly 22,000, which has been a steep growth, 10 times growth in just 3-4 years time period. So far in the 5 months of this financial year itself, the industry has done about 20,000 already, which is pretty close to where the industry was for the full financial year FY22. So I clearly see that the industry by this financial year end would cross 50,000 is what I anticipate, given where we have already the volumes that has already been attained by the industry in the first 5 months. So this is where I see the industry moving towards.
Right. And what about Tata Motors specifically?
So, we have been literally 88% of this market so far, and we have done about 17,500 kind of a volume. And we should also target closer to the 50,000 mark is what our effort would be.
Okay. What next after the Tigor and the Nexon EV? Are sub 10 lakh cars, are more affordable cars in the pipeline? Are you coming up with the announcement soon, Mr. Chandra?
So, we had in the past talked about 10 products in the next 5 years, and we are very committed to that. And when we talked about these 10 products, it included 3 generations of our products, which is Gen 1, the typical conversion products like Nexon and Tigor EV. And then you have Generation 2 products, which are adapted ICE platform products, more electric ready, and new top hats like Curve coming on, that generation of electric vehicle technology from our side. And then there are pure EVs like Avinya coming from Generation 3. So this 10 will constitute to these 3 generations of products which will coexist at any point in time. But also it includes cars, which will be of widest range. When I say widest range, in terms of affordability, in terms of body styles, in terms of range and features that we'll give in these vehicles. So right now, as you rightly said, we have a Tigor and Nexon, and there is very soon, I would say very shortly, we would be talking about a more affordable car from our side. And so I can only say that stay tuned. It's going to come very shortly.
All right. So you're saying very shortly. Could you give us an indication? Because people say the sweet point for electric vehicles would be sub 10 lakhs. Is that a price point that you'll be able to bring the car at?
So I would not like to reveal and take the suspense away from the pricing of the affordable car that I'm talking about. But I can only say that this is going to be a segment lower than Tigor is what we have in the market right now.
Well, that was Sailesh Chandra, the Managing Director at Tata Motors PV Business Unit. Remember, you can catch the entire conversation today at 5:30 p.m. Okay, all right. Well, as we get into festive season, we have been speaking to companies across industries to get a bit of a sense on how's demand looking like. We have Amit Agarwal, Group CFO at Raymond, who joins in to discuss more on the trends they are seeing. Hi, Amit. Morning. Thanks so much for joining in. Well, give us a sense in terms of, how is the approach to festive season shaping up? Also, what are the inventory levels you're looking at? And finally, tell us about the transaction value. I recall it had moved much higher in comparison to pre-COVID levels. Could you put a number to that?
Sure. Thank you for having me. And obviously, after 2 years of pandemic, this year people are out really to celebrate. And as we have seen the primary bookings from our dealer network, our franchisee network, we are extremely, extremely bullish that we are seeing a very strong demand recovery coming back. And if I look at the kind of festive season, people have made the bookings as well as the wedding, because immediately after the festive season, after Diwali, Dussehra, you get on to the wedding season. And Raymond is such a company which provides fabric, apparel to all the people, consumers at all cities, as we are present in 600 cities, to all classes of customers and to provide their needs. So to that extent, we are seeing very, very strong, robust demand for us. And what you rightly pointed about the average ticket value, I think we have seen pre-COVID to now almost 14 to 15% increase. So which used to be in a 3,300 rupee a range. Now we are seeing more in the range of 3,800 rupee a range. And secondary markets supposedly are supposed to pick up by mid to late September, when people start from the east side of the country, where the Dussehra, Durga Puja starts, then flowing into the north, then the west, and slowly into the south. So across the country, we are seeing very, very strong demand from the domestic market.
Sure. Earlier, you had said that you're looking to grow 12 to 13% on the revenue side for the full year. Is that a target that you continue to hold, or would you want to scale it up, given demand?
Yeah, we are seeing even a robust compared to the 12 to 13%, because we have got very, very strong bookings in across our businesses. And let's say talk about the lifestyle and even our real estate business, which is also becoming a larger piece of the business, is helping us to grow the overall revenues.
Okay, all right.
Sorry, for the real estate business particularly, just wanted to understand, you're sitting on revenues of, I think, quarterly revenues of around 280, 290 crores. What are the projects that are underway and what could the revenue run rate be?
Yeah, so as you know that today we have got first phase of the project, which is development of close to 20 acres at Thane, and that could deliver me close to 4 million square feet of construction. And as you will also know that we have announced the first JDA project, which we would be launching somewhere in December, January, and that will further add to the revenues. So, and we are also delivering 900 apartments in December 2022, which is 2 years ahead of radar. So overall, what we are seeing is that our revenues are going to grow. I won't be giving a specific guidance on the numbers, but you will see the progression on the revenues as we embark and completing the projects and growing the business from there.
JDA is at Bandra, right? And it has a revenue potential of around 2,000 crores, I believe. When is the completion date of this and what is your share?
So basically, if you look any project of this kind, we have got a 7 lakh square feet. So it is a 5-year project. So it will start, let's say, this year, December, January, and it would take 5 years to complete. And 2,000 crore is the revenue which we are talking is for our books.
Oh, okay. All right. You know, some part of your business, I think of your lifestyle business, maybe around 15%, comes in from exports. You could give us an updated number out there. Has there been any slowdown on the export portfolio? Or are you still seeing traction out there? And give us an updated number.
Actually, you see, export, we are very, very happy to tell you that we are booked all the way till March. We have seen strong bookings. And what could be a potentially some impact, but we have been able to get new customers. As you know, this China plus one strategy has played very, very well for India and especially for us. Some of the customers which were not coming to us earlier, maybe 5-7 years back, because of the Chinese buying, they have really come to us and started to give the prices which we wanted and maintaining our intact margins. So that is going to help us in terms of any slowness in the demand from any of the customers. Rather, on the other hand, we are expanding our lines both at Bangalore and Ethiopia. Okay. So we are putting more capex into this as we see a huge opportunity for us to grow this business.
So what is the capex that you're putting in to expand the line, and will that put more pressure on your debt, because debt has been rising? It's, I think, about 1,300 crores now.
Yeah, so let me tell you, first of all, the capex is very, very small, and this is all businesses are cash flow generating. And what you've seen from March to June, let me clarify, the debt increase is because primarily we built the working capital during the first 2 quarters to meet the demand for the third and the fourth quarter, because the third and the fourth quarter is where typically the people come and buy through our stores or through the dealer network. And therefore, it is a planned increase in the debt, which will additionally come down over the second half of this year. And as we have stated very clearly, we are on the path to deleverage the company. If you see in the last 2 years, we have reduced more than 800 crores of debt. So we are clearly on the journey to deleverage this company and make it a zero debt over the next 2.5 years.
Okay, zero debt in the next 2.5 years. You know, Amit, one of the factors that could be playing in your favor is cotton prices have cooled down a little bit, though they're still at elevated levels. For FY23, how much better can the margins be in comparison to FY22? I think you were talking about 100 or 200 basis points expansion. Could you quantify that?
So look, as you rightly pointed out, the cotton prices have cooled off. However, if I look at my shirting fabric across my portfolio, what we need is cotton is only for the shirting portfolio. And in the shirting, because you consume almost 20% of the total selling price as the cotton, we have been able to consistently increase the price. So there has not been any margin impact per se, maybe a lack of quarter or two, but not really impacted on the margins per se. So across the portfolio of textiles. So we are very clear that the same margin improvement which we have told earlier, we will continue to stay on track for that.
Okay, Amit, we'll leave it there today. Thanks a lot for joining us. That's Raymond. The stock's done well. The pre-open has settled, and it's actually even better than what the S6 Nifty told us. I mean, that's what happens when the market is in a momentum. Yesterday in closing, we was making this point that once 4,200 is taken out, 4,500 looks imminent on Bank Nifty. It's starting above that. Will be interesting to see. Of course, now it's a fresh weekly series, so that 40,500 call perhaps is not as material as it was yesterday. And on the Nifty, we are at 17,923. Now, Mitesh, the issue here is if you're in, you're fine. But if you're not, then the Nifty is starting very close to 18,000, which is where the algo trades might come in, right, to book some profit. And 40,500 on the Bank Nifty. So how do you take a fresh trade? And what's the 9-10 call?
So, unless until you are compulsory into index trading, I think you can always look at stocks which are breaking out and be there. But I think today, between the two indexes, as I said, I think, while the Nifty is closer to 18,000, the Bank Nifty could start getting past 40,300, 500. I think Chandan also spoke about that. That will be the highest ever weekly closing for the Bank Nifty, and that could, trigger the upside in the markets or look for stocks. On the 9-10 call side, ICICI Bank is my pick for the day. That's a buy. Keep a stop below levels of 887 and target of around 925 on the upside can be looked at.
Okay, well, just wanted to talk about one stock before the market opens, which is M&M. Could be in the green today as the company has unveiled its first electric vehicle, the XUV 400 yesterday. And this is important because it's going to directly rival the Tata Nexon, which has done exceptionally well. This is a very under-penetrated market. Less than 1% of Indians use electric vehicles compared to the overall sales of passenger vehicles. And they will launch 5 more EV SUVs over the next 5 years. Remember, M&M has done exceptionally well in this space. It's currently the #2 player in the overall utility vehicle market. Its market share has gone to 17% and it's looking to grow this space. Currently, the EV four-wheeler penetration, as I said, is quite less. And this segment is a sweet spot, the SUV EVs, because the GST on EVs is just 5% versus on ICE engines is 50%. So they're looking to capitalize on that as well. Two quick brokerage views. Nomura has a target price of 1,500 and Macquarie at 1386.
Okay, so that's on M&M, and the stock's, of course, been on a tear. Just one-way move. Started at 800, this move, I still distinctly remember, and just hasn't stopped since then. Let's count down to the market open because it looks like we'll have a good start. Yesterday, the mid-cap market sort of underperformed a bit, so maybe that fervor would be back in the broader market. The first rates are in and the Nifty is up about 113 points. So in line with what the pre-open was telling us. So looking quite good over there. The Bank Nifty is opening about 300 points higher, so looking quite strong. ICICI Bank really has been the go-to stock for the market. I mean, just look at that. 910 and counting, fresh all-time high on ICICI Bank and State Bank of India. These two stocks move in tandem. In fact, they've just been, taking the bulls forward in the Bank Nifty. Kotak Mahindra Bank is contributing as well today. Infosys is looking good. In fact, 1488 on Infosys. Keep an eye on 1500 if it starts to sort of cross that. I was saying this morning as well, maybe some tactical move is possible in some of the IT names as well. For now, 350 higher on the Bank Nifty, by the way, holding 40,500. Hindalco is now your top Nifty gainer, up 2%. IndusInd Bank is up 1.5%. Hindustan Unilever is doing well. Shree Cement this month is now up 12%. This is after the announcement of being thrown out of the index. That's what normally stocks do because the underperformance has already happened. Titan, JSW Steel, Tata Consumer, Tata Motors, these are some other stocks doing well. BPCL is the only Nifty loser, and that too not by much, but otherwise a very, very strong start. 17,905. Remember, the next levels to watch on closing basis, the resistance levels are 17,950 to 18,050. And on the Bank Nifty, around this 40,500 mark. But broader markets, Sonia.
Okay, broader markets, very good opening really. The mid-cap index is up 200 points, by the way. So many large caps hitting fresh 52-week and fresh record highs. SBI, ICICI Bank, Ambuja Cement, ITC, M&M, all at fresh highs this morning. It's a very, very strong market that we have on our hands. Apart from that, in the broader markets, you have a lot of these stocks that are volume gainers, whether it's Dish TV, you have Motherson Wiring that's up 3.5%, you have something like a Granules India that's up almost about 3% and big volume moves over there. Zomato. Banks are coming back in a big way. So Bank of Baroda, Federal Bank, South Indian, Yes Bank are all up anywhere between 2 to 3%. And this is a space that's powering ahead. On the downside, very few and far between really. Something like an Indiabulls Real Estate perhaps is down almost about 3% or so. And lots of stocks hitting fresh 52-week highs even in the broader markets. Ujjivan Small Finance Bank is at a fresh 52-week high right now. ITD Cementation is at a fresh high. Specialty Restaurants, Patanjali Foods, Ujjivan itself. Then lots in the capital goods space. Thermax is at a fresh 52-week high too. Looks like a rock-solid market and just gaining more ground.
Well, that's right, Sonia. And a few more stocks just to point out. PNC Infra, well, that stock had opened up in the green. They've signed a concession agreement with NHAI. The bid project cost is close to around 1,500 crores odd. So that stock has opened up with a gain of close to around 3.5%. Some of these hotel-related stocks, well, they are getting, the reports suggest that they could get some trade incentives. So some of them should come up for you. Lemon Tree, that one, or they've already had a big run. Chalet Hotels as well. I think the first tick was in the green. Samarthan Motherson, they made a small acquisition out there, but Motherson Wiring actually, that stock has been doing well for the last couple of days, and today as well, it's popped up well in trade. And add to the list a couple of these, rail-related stocks. Titagarh Wagons, they've completed the divestment of the Italian subsidiary, so that's up and about. Texrail is up close to around 5% as we speak. So plenty of winners in the broader market.
Well, let's move on and talk to our market master of the day, Mihir Vora, Director and Chief Investment Officer at Max Life Insurance, is joining us now. Mihir, good morning. It's good times and great tidings, right? Interestingly, the global environment is not that great, but India is outperforming in a big way. Do you reckon that this could be the order of the next few months? And what do you do at a time like this? Do you put fresh money to work, or would you wait for some of these global events like the Fed meet to play out?
Hi, good morning, Sonia. You're right. India has done extremely well. In fact, a bit scary, especially given the currency strength that rupee has demonstrated versus the other currencies, which is kind of also making me a bit worried about the trade deficit. So I think the broad theme is that the Indian domestic consumption story in the last few months has been very robust. And we are seeing a lot of traction in the consumption-linked themes, whether it's the opening up trades or the discretionary consumptions or even FMCG now to some extent. So I think the domestic economy is very strong, both on the goods consumption side as well as the services consumption side. And that's leading to a good amount of positivity in the local investor sentiment. The overall, global macro, of course, as you mentioned correctly, is not supporting us. And that's what makes me a little bit worried, especially given the current state of valuations.
Okay, fair point. Well, the market is, still holding. But as I said, because you're so close to some resistance, that there might be some profit taking. But just look at some other stocks. Shree Cement is once again your top gainer, 2.5% higher on that. Mihir, good morning. We've seen a massive run in cement stocks in the last 10-15 days. It's a bit of a deja vu. When the domestic economy stocks start to move. But are you buying any of the cement stocks at current price? Of course, there was this big deal as well of Adani buying Ambuja and ACC. The sector itself has sort of got its mojo back off late. But any views here?
So cement is always a sector which, surprises on the upside whenever people start talking negative about it. And that's because ultimately there is a bit of, there's a lot of supply discipline in the sector, which they have demonstrated over a long period of time. And it's one of the very pure local segments, I would say, purely local sectors with supply discipline. So that's how, whenever there's a bit of positivity on the local economy, the domestic economy, cement does tend to do well. But it's also supported by some good anecdotal data points. We have seen that real estate has been doing very well, especially on the urban demand side. We have seen pockets of demand coming back in Bombay, etc. Bangalore, Hyderabad, anyway, have been doing well. So I think real estate doing well. Government spending on infra likely to continue, and the fact that people are looking for probably pure domestic plays rather than a mix of local and global. So cement fits in nicely with that.
Okay, banks is really the place to be, right, Mihir? I mean, as we speak, most banks are sitting at fresh highs. SBI, ICICI, Bank of Baroda, even something like a Yes Bank has now been moving up. Wanted to ask you, do you feel it's a bit of a crowded trade right now, especially this private banking space, or do you see this as some sort of a structural up move?
I don't think it's crowded yet because the banks have moved, of course, in the last couple of years, but they are still not outperforming vis-a-vis the pre-pandemic levels. So I think banks underperformed quite a lot from 2020 to 2021, and I think it's only catching up. And if you compare the valuations of the sector both private as well as public sector banks, they are not really crossing the previous high. So there is some valuation support there.
That's on the banks. What about IT, Mihir? Because that is where we have seen at least one pocket which is still in a bear market, while the other stocks have moved on. IT index is still 28% from its highs. Of course, it had a massive bull market before that, so have to put it in context. But still, your view on large cap IT?
So I think it's the mirror image of what we just talked about, which is the banking sector. While banks underperformed, the global sectors like IT outperformed massively in the last couple of years. And now that we have the Western economies probably having seen the best of the stimulus, best of the corporate spending, there is a good chance of demand continue to do well, but not as well as we've seen in the last couple of years. I'm talking about corporate demand for IT services. So all the pent-up spending that companies had to do, or extra spending that companies had to do to enable high volumes of streaming traffic, high volumes of online shopping, high volumes of work from home requirements for connectivity, etc. So all that spending which was forced due to the pandemic has been done in the last couple of years. So maybe the robustness of demand will continue, but not to that extent. And valuations having moved up by almost double 2 to 3 times in the last 20 to 30 months makes a case for some amount of consolidation of IT. So I think it's a global sector, and the markets are playing the local sentiment as of now.
Hi, Mir. Good to hear your thoughts as always. What do you do with auto? Those stocks have done phenomenally well. The rebound in demand, cooling off of RM costs, supply side issues getting sorted out. But at these levels, what do you do? Some of them are sitting at fresh 52-week highs.
Yes, Nigel, but again, we must step back and, like we did in banking, step back and see where the auto stocks are compared to pre-pandemic levels. So if you look at the car demand, the two-wheeler demand, it is still, barely coming back to the pre-pandemic level. So there should be some steam left, even as far as demand is concerned. And of course, the other tailwinds like raw material prices and semiconductor issues, hopefully are behind us, which makes for a, further potential drivers in the next few quarters.
But overall, Mihir, what are you feeling about this market now? Because, there is one view that this market could just see outsized gains purely because of what's happening globally, right? But then we are also possibly heading into a global recession. So it's kind of a binary situation right now. How are you feeling about it? Is it good to deploy all the money in one go now, expecting that big boost? Or do you think that, over the next few months, perhaps you need to take a bit of a cautious call?
So first of all, let me be very clear. Compared to pre-pandemic levels or pre-pandemic situation, the Indian long-term structural story actually has become much stronger. So there is no two questions about it. The China Plus One, Atmanirbharta, defense manufacturing, and the robustness of the local demand, in spite of government not doing much on stimulus, has really surprised global investors. And I think the Indian story and the Indian visibility has become much better than 2 to 3 years back. So that I don't think is a question at all. But as you rightly pointed out, there are short-term headwinds. Europe is going through hell. There is no way they can avoid a recession. The kind of stimulus or the kind of subsidies that they have to dole out for just energy is mind-boggling. So to that extent, 1/3 of the global economy going through hell. The other biggest economy, which is China, is also going through big problems. Exports are sluggish, which they need to grow. And their real estate sector, which is the largest segment, is also going through very, very bad times. So Europe, China, which are large components of the global economy, are likely to not show any good news for the next few months. And the Fed, ECB are very, very hawkish at this point in time. So I think there are huge global, headwinds for the global markets, and that's what makes me a bit worried for India also. While the domestic story, short term as well as the long term, is quite robust, but I'm not too sure how the global flows will pan out.
Okay, so in that context, are you worried about the recent moves in the broader market? And the market's already trading at a much higher premium to its emerging market peers than it has in the past. And within that, now a lot of individual mid-cap and small caps, we are seeing a bit of an exuberance.
Yes, I would be cautious, at least at this point in time. Though, as we mentioned, if you look at individual segments like we talked about, say banking, like we talked about, say auto, their valuations don't look that expensive, though the market as a whole is trading a bit higher than average valuations because of some of the other segments. But valuations are not that expensive, but I'm just quite worried about the global situation. And if you see suddenly a big bout of risk off, then that can be a headwind for the market in the short term.
Okay, all right. Amir, very fact that the globe and parts of the globe are going to go into recession, case in point being Europe, the metal index is a strict no-no. Some of those metal stocks, they could have a near-term tailwind, because of the shutdown of capacities. But China is still in a very, very sticky spot. So would you rule them out despite their balance sheets being in much better shape than it's been, say, in the last decade or so?
So I think the bigger driver is China because in the global scheme of things, Europe, whether it's aluminum or steel, does not really matter much as far as the shutdown in capacity is concerned. So what we need to focus is on China. And there actually they have been, while of course as we discussed, there is a slowdown, but they are also managing the supply side quite effectively. So they may not let the prices crash beyond below a certain level, and since they have the largest capacities in any case, I think you may not see the kind of lows that you saw, say, pre-pandemic or during the pandemic, etc. So I think it's kind of a neutral kind of situation as far as the supply demand is concerned.
Okay. I know we've discussed banks, but I do want your thoughts particularly on PSU banks, because at the moment there are some cyclical tailwinds that are playing out, right? Stronger asset quality, improving growth, stable operating performance, and we are seeing it in stocks like SBI. Do you just stick to the larger PSU banks, or now do you look beneath the surface as well?
We are sticking to the top couple of banks only in the PSU space. Because while valuations are attractive, they are equally attractive even on the private sector side. So, it's not a very clear case of going all out on PSUs for valuation only, because even the private sector has good valuations to offer.
Okay, well, Mihir, on that note, we will let you go. Thanks a lot for joining us and giving us an update on the markets, which, by the way, is soaring right now. We're almost ready to hit a century on the Nifty. The Sensex is up over 300 points, and it's banks all the way. The Bank Nifty has now scaled that 40,000 mark quite effortlessly, up almost 1%, and is really packing in a solid punch this morning. I mean, doing all the heavy lifting.
Oh, yes, absolutely, Sonia. Just look at the broader market, advanced decline at about 3.5:1. On the Nifty, again, the issue is 17,950 to 18,050. I mean, look, it's a market in which you have to really stay in, because if you keep jumping in and out, then there's a problem. If you stay in the trend, easier said than done. I mean, this is an easy market in the sense that forgiving market. It's willing to give you your trades, willing to give you your jackpot if you're willing to take it, that is, in the first place. A lot of new names, by the way, which are making the run right now. DV's Labs, for example. Today, Pharma is making a bit of a comeback after underperforming for so long. Metals are doing well, and this is another trade which has played out despite the higher dollar index. Names like Tata Steel, Hindalco have done well today. IndusInd Bank is doing well. So a lot of individual names doing well right now.
Absolutely. And, I think in banks what's happening, and I'm referring to a Morgan Stanley report where they also raised their credit growth estimates, loan growth estimates for the sector. They speak about how there's a new leg of an investment upcycle currently in the banking space because of improving corporate profitability, improving capacity utilization rates, and deleveraging of the banking sector balance sheet as well. So a lot of things coming together for the banking space. That'll be our focus over the next 15-20 minutes. But in the meantime, my colleague Sonal is here to talk about the Bernstein model portfolio and how it has evolved. Sonal, over to you.
Thank you so much for that. Well, Bernstein has updated their sector positioning, and they've added 11 stocks to what they call as Team India. There are 10 longs and 1 short idea in that portfolio. In fact, they've also added 10% cash to this portfolio that I'm going to talk about. They are now overweight on financials, IT, telecom, pharma, cement and energy, and they're equal weight on industrials except for L&T, where they are very positive, and autos. And now they are underweight on metals, utilities and consumers. And recent downgrades from Bernstein have been on industrials and consumers, while they've upgraded sectors like energy because of higher prices and building products as well. So they raised weights for metals after the underperformance that we've seen so far in this sector, and they've added Cipla, Ultratech Cement, Zomato and Reliance Industries to their overall portfolio. They've replaced Lupin with IEX in their short bets that they have over the medium term. They have booked profits in Maruti, Bharti and TCS, and they have removed Dr. Reddy's, Bandhan and Biocon from their overall portfolio. So if you just look at the list, the 10 long ideas include the likes of L&T, where they expect their ENC division to do better. The margins have bottomed out there. There's Cipla, two big banking names out there. There's Tech Mahindra and Infosys. They like the large cap IT space. Reliance Industries, Ultratech Cement because of the upgradation or the positive fundamentals that we are seeing in the cement space. There's Crompton Consumer and Zomato. And on the short side, they have IEX, which is a medium-term fundamentally strong stock, according to Bernstein.
Okay, Sonal, thanks a lot for that. The strongest sector in the market is banking, and within that, the strongest stock has been State Bank of India. The loan growth is coming back in big way, with 40 to 45% of the loans being driven by the retail sector. To discuss this, we are joined by country's biggest banker, Dinesh Kumar Khara, Chairman at State Bank of India, is now joining us. Mr. Khara, good morning. Thanks a lot for joining us. So you tell us first, what's happening with the kind of loan growth that we are seeing and so much coming from the retail sector? Is this sustainable, and does this come with profitable growth?
Good morning, and thank you for having me on your channel. Well, of course, when it comes to the kind of a loan growth which you are seeing, and more so in the retail sector, to my mind, it is quite sustainable. Sector, which was whatever was there, it is now getting met through the availment of loans, and we are seeing it uniformly across mortgages, across unsecured personal loans, across pension loans and auto loans. So I think practically all the subsegments in the retail segment are doing well, and we have a very clear visibility of the demand which is there, and hopefully going forward, as the busy season kicks in, and of course already the festival season has got kicked in. So I am quite confident that we will continue to have a decent retail growth. Even in the first quarter also, we grew almost about 18%, though on a CAGR basis, we were growing at about 16% for about last 4 years in the retail segment. But I think we will continue to see a decent growth in the retail.
Growth in retail, Mr. Khara, that's of course been the key driver. But what about the corporate credit, capex-driven corporate loan? Do you think that's also showing signs of, coming back? Your view here?
Yeah, in fact, in the corporate segment also, we had seen a growth of about 10% as at the end of the last quarter, and we continue to see a similar trend even in the current quarter as well. When it comes to corporate, essentially, what I would say is that essentially partly on account of the much better capacity utilization, which is now at about 75.3, 75 points. So somewhere around that, the capacity utilization is. So it has led to an improvement in availment of the working capital. And even there is a visibility of the project loans also. And we have got a decent book of almost 1.5 to 1.75 trillion. Which is under process as far as the project loans are concerned. And the interesting part is that a very large proportion of this book is, these proposals are from the private sector. About 70 to 75% are the proposals coming from the private sector. So I think, I hope that this will continue like this, and hopefully we'll have a decent time going forward.
So, Mr. Khara, good morning. You said that your retail sector growth has been on a compounded basis about 16% over the last 4 years. I'm assuming you can do better than that over the next 2 to 3 years, given how demand has come back. And corporate sector loan growth was 10%, you said, in the quarter gone by. So overall, what could the sustainable loan growth be for SBI on a compounded basis over the next 1 to 2 years?
At least for the current year, I can say with some bit of a certainty, the way things are, I'm hoping that we should be in a position to record at least 15% growth in the loan book and in the current year. And that's what.
Okay. All right. Mr. Khara, if you could also give us a couple of more numbers. 15% loan growth. What is your NIMs likely to be and your broad range of your credit cost?
As far as the credit cost is concerned, my guidance has always been that we'll be keeping it less than 100 basis point. Though we have achieved 61 basis point as at the end of the last quarter. Hopefully, we should be somewhere in that range only. But the broad number which I'll keep for myself would be that it would be less than 100 basis point. That is for sure. And as far as NIMs are concerned, I'm hoping that we should be somewhere around 3.15, 3.20, those kind of NIMs. Because in the NIMs, there are at times some one-offs, but I think if we normalize those one-offs, we should be in a position to keep the NIMs around 3.15.
Okay. Mr. Khara, your stocks at record high. Any kind of fundraising plans that you have?
We have recently completed our 81 issuance. We have raised more than 6,800 crores, and that possibly the best of the price. So I think that's what it is. And apart from that, we'll be raising some tier 2 also very soon. So as of now, this is where we stand.
Mr. Khara, there's a question that's come from my analyst asking that there's reports that you will be redesigning savings and salary accounts to garner more deposits. Is that true? And if you could explain that.
Yeah, we are, as far as the savings and the corporate salary packages accounts are concerned, that is one of our major focus for our savings accounts. And it will continue to be the focus going forward. And even now, we're also trying to, in fact, having a focus on the current account from the traders and the vendor segment also. We're offering cash management products. So I think we are offering multiple value-add services to our account holders. So that will continue to be the focus for us going forward.
Sir, I want to come back to that point you were making about corporate capex and how things are picking up. The government has actually done a lot, right? Many initiatives to boost capex, whether it is the PLI scheme for the manufacturing sector, expansion of public infrastructure spending, or even opening up of new sectors for private businesses. From a banker's perspective, I want to understand how much has the infrastructure loan growth picked up now compared to, say, what it was earlier? And are you seeing incremental loans from that side?
No, of course, infrastructure sector has continued to be the mainstay for last couple of years, because when it comes to road sector was one of the major sector where a lot of lending has been done, but they've been all into the ham, majorly into the ham. And apart from that, now we are seeing good traction in the renewable energy. That is something which is, and the EV space also. There's a good lending which is there. And I would say that apart from all this, I think road, airport and port, that continues to be the focus for the infrastructure. I think these are some of the major sectors where we're seeing some decent growth. Apart from that, even NBFC space also, there is a good growth. So which is seen.
Mr. Khara, now in terms of resolutions, the pace is slow, right? A lot of stress in NCLT cases still remain unresolved. How many cases do you expect resolutions, say in FY23?
Well, our estimation is that in the current year, we should be in a position to resolve at least about 100 odd cases through resolution. Through the NCLT process, and almost about 80 odd cases through liquidation process, which are also the cases referred through the NCLT. So that's what my broad assessment is.
Mr. Khara, we recently had a guest editor who's one of India's best-known fund managers. He was making a point that the worst of asset quality issues is behind us, and he's making a point for the entire banking sector. That if you look at the top 100, 200 corporates, most of the stress is now over, and we will never perhaps revisit that bogey of the large scale, the kind of NPAs that we saw in the last decade. Would that be a fair assessment?
I tend to believe this because there are a couple of reasons. One, of course, the leverage on the corporate book has come down quite a lot. That is one major reason. Secondly, corporates have also started reaching out to the market instruments. That's the reason. And thirdly, of course, there is a responsible borrowing as far as the behavior part is concerned. And, in the past, it was losing a control of an enterprise was more of a fiction. But post-sincerity, it has become a reality. So I think that is something which has really changed the way people look at raising loans from the banking system is concerned. So they are very mindful in terms of how much to raise and when to raise. And also they are quite mindful in terms of adhering to the discipline prescribed by the lenders. So I think these are some of the positive developments which have happened, which actually supports my thinking as well, that perhaps the kind of the stress which I had seen into the corporate balance sheet in the past, I think it should be more of a history as I also look at the situation.
Okay, on that optimistic note, Mr. Khara, thanks a lot for giving your time to us. Always appreciate your views and your time. Thanks a lot for joining us.
Thank you very much. Thanks a lot.
Okay, that's State Bank of India. Comforting voice, actually, and no doubt that the stock is at all-time high. I mean, no surprise, given the way the issues are getting resolved. This reminds me of this 2000. I keep going back to that phase because that's the phase that is still fresh in my memory, even though it's 2003 to sort of 5 phase. And these are exactly the kind of voices I was hearing, and these were exactly the kind of stocks which were doing well. And this was exactly also the time when actually the interest rates were going up, and still you saw the markets also kept climbing higher, and some of these stocks doing well.
I think also banks are in a sweet spot, right? As Mr. Khara was telling us, corporate capex has now come back. After so many years, corporate profitability has improved. There's a revival of the investment cycle, and banks are big beneficiaries of that. Retail, in any case, had gone up post-COVID, but now even the corporate piece is improving.
Absolutely, and SBI, of course, has been a rank outperformer. 28% over the last 12 months versus Nifty Bank, which is 10. I think ICICI Bank would be the only one which perhaps would be higher than SBI, if at all. Otherwise, I mean, I'm talking about the large banks, of course. If you see ICICI Bank, there it is. Okay, even outperforming ICICI Bank as well. So these two clearly, when ICICI Bank and State Bank of India do well, you know that the economy is doing well or is repairing. We'll do one thing. We'll take a break now. Up next, we'll talk to Ajay Patil of Cummins India to discuss their business outlook going forward. Later, we'll connect with Rahul Sharma of GM Financial Services to talk about the charts on Nifty, the Bank Nifty, and some individual names.